I wanted to do this video today because I had a meeting with a couple weeks ago where both the salary increased significantly as of late. So first we worked out what their borrowing power was and what sort of price range they could go up to where they are still comfortable. So it may not take 12 months to save up everything that you need. It may take 18 months, right? So like I said to you, how fast you can save up depends on if you're living at home, what your expenses are, what your plans are, if you're renting, do you have other debt, etc. Good day everyone, I'm your host Tony Xia and thanks for joining me on another episode of the Mortgage Chat. So today I want to talk about how can first home buyers save up for their first property. And this is more tailored towards, first home buyers that don't have help from the family or just started off saving up, got a good job. How can they save up fast enough to purchase a property? I wanted to do this video today because I had a meeting with a couple weeks ago where both the salary increased significantly as of late. Before they didn't really have the borrowing power or the capacity to save up to purchase their first home. And they didn't have bank of mum and dad to help with, right? So they had to go the old school way. They have to save up. They have to find ways to save up. They need a plan to save up and reach a certain goal in, next year to purchase the first home. And that's why I wanted to do this video today because, there is a few schemes out there these days that are making it a little bit easier for first home buyers to get into the property market. So a lot of these things that I'm saying right now are more tailored towards Sydney residents or New South Wales residents because I'm from Sydney, New South Wales myself. But if you're from another state, the same logic applies. You can still use these schemes, and depending on which state you're from, stamp duty may or may not be applicable to you as well. All right, so let's get this episode started. I'm using these couples that I spoke to a few weeks ago as an example in what we went through and how they could save up a certain amount of money in a certain period of time to purchase their first home. So first we worked out what their borrowing power was and what sort of price range they could go up to where they are still comfortable. Now we worked off a purchase price of around $800,000. And the reason why is because anything that's $800,000 or below in New South Wales, you can actually get stamp duty waived. Anything between $800,000 to $1 million, you'll get a concession. And pretty much every state in Australia will have a stamp duty threshold where you don't have to pay stamp duty. And between a certain amount, you'll get a concession. So in New South Wales, your threshold is $800,000. And that's why we picked up to $800,000 for these clients because they're on around $90,000 each. And based on their borrowing power in getting a loan for a purchase price of $800,000, they can afford it. They can still live a half decent life. They can still live a dream and they can still have a bit of money saved up. That's why $800,000 was a sweet spot for it. So the first thing was, how much savings do I need? Well, the good thing is they're going to use schemes, right? They're going to use government schemes, which is available for all first home buyers in Australia. The first scheme they're going to use, or the main scheme they're going to use, is the first home guarantee, where they only need a 5% deposit. The good thing is they don't have to pay stamp duty because they're going to buy something below $800,000. So essentially, what they're going to do is then they have to save up $40,000 if they were going to purchase something for $800,000. There's a few other schemes that they can and will be using, which I will explain a little bit later on in the video. But how fast you can save up, it really depends on a few things as well. It's like, are you living at home? Do you have other expenses and debts? Are you renting, etc.? Obviously, if you're living at home, you don't pay rent, you don't pay board, you don't have, car loans, personal loans, etc., then yes, you can save up a little bit more faster, right? But in this example, both of these clients are still living at home, so they can actually save up quite a fair bit. So now let's talk about the borrowing power. So like I said to you, their income's around $90,000 each, right? And based on that income with HEX only, their income allows them to service the loan for $760,000 and also allow them to live a little bit of a dream, save a bit of money, and don't have to live paycheck by paycheck. Obviously, their goal is to purchase something a little bit below $800,000, but we worked out the maximum limit they should go up to is around $800,000 as a purchase price. And the only debts these clients have to get that $760,000 loan is only HEX and a $5,000 credit card limit each, which is nothing. So now let's talk about what schemes they're going to use. The first scheme they're entitled to is the first home guarantee scheme, where they only need to save up a 5% deposit. And the government is going to guarantee the other 15%. Now, the reason why the government is doing this is because it's too hard for first home buyers to save up the whole 20% without paying any lender's mortgage insurance. And because the government is guaranteeing the other 15%, there is no lender's mortgage insurance is payable as long as you meet the 5% deposit required and also genuine savings, which is a bank policy required. And to find out if you're eligible for this first home guarantee scheme, just type in first home guarantee in Google. The website will pop up. There should be a fact sheet in there. Just have a quick read of it. It's only a 2-pager to tell you what are the criteria to be eligible to use this scheme. The second scheme they're going to use, or benefit as you'll call it, is no stamp duty, right? Because they're first home buyers, they've never owned a property before, they can buy anything for up to $800,000 without any stamp duty involved, right? So different states will have different thresholds, so you'll have to check on that yourself. But in New South Wales itself, up to $100,000, you don't have to pay stamp duty. And anything between $800,000 and $1 million, you'll still have to pay stamp duty, but you'll get a bit of a discount on it. The last scheme we're going to use is a first home super saver scheme, where you can contribute extra into your super at a 15% tax rate rather than your normal tax rate. And I'll quickly show you the difference. Okay, everyone, so I have a whiteboard in front of me. So jump into YouTube if you want to have a quick look at this example, okay? So we're going to assume both of them are going to contribute an extra $15,000 each into the super every year. So what I've done here is, you can see here, for the first home super saver scheme, they tax at 15%. So out of the $15,000, they're only going to get taxed $2,250. Now, so if they didn't want to use this scheme and they'd rather put that money into their savings account for argument's sake, they're going to pay 30% tax, which equates to $4,500 from $15,000. That is actually a difference of $1,750 if they were to put it in the first home saver scheme into the super or just pay the normal tax rate. $1,750, not a lot, but it's still something, isn't it, right? So if they were to make the commitment of contributing an extra $15,000 each into the super as part of the first home super saver scheme, pay the 15% tax over the 12-month period, they actually have around $25,500 they can withdraw from the super to contribute as a deposit for their first home. So remember, we only needed $40,000 as a 5% deposit. Now, after 12 months, they got $25,500. So they're already more than 50% of the way there. So now they have $25,500 in the super that they can withdraw anytime out. They only short around $14,500. Now, how fast you can save up this $14,500? Well, it depends on you, right? Like I said to you before, if you're living at home in comparison to if you're renting, obviously living at home allows you to save up that $14,500 a lot more faster. So now, how are we going to save up the remainder of the $14,500? Well, let's break it down again, right? And the good thing is they're living at home, so they could save up a lot more faster. Now, remember, we're going to use the first home super saver scheme where we're going to contribute $15,000 into the super. So they're left with $75,000, right? Now, per month net after tax, they're going to pocket around $4,796 each of them. Okay, not both each, right? Now, we're going to say, assuming that, their expenses are going to be $600 a week, which equates to about $2,600. So really, they're going to be left with around $2,196 left per month in savings. Times that by 12, that equates to $26,354. Look, they may have insurances, unexpected costs, etc., 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 right? So, and also, we don't want them to not have a life, right? Because they're still young. Let's say for argument's sake, they've got unexpected, expenses, parties, travels, going overseas, insurances, right? So instead of saving up $2,196 per month, they're going to save up $1,000. All right, fair enough, okay? So worst case scenario, I'm saving up $1,000 a month only. At 2 people, that's $2,000 a month. At 12 months, that's $24,000. And remember, I'm only short $14,500. So I've already reached my target of $40,000, which is the 5% deposit for the $800,000 purchase that I'm aiming for. So easily, these 2 couples can actually achieve that within a 12-month time, saving up $40,000 so they can buy their first property in 12 months' time. Obviously, it's not just $40,000 I need, right? There's other expenses. It's too good to be true. So obviously, I need a little bit more than just the $40,000. And I'll tell you why. So $40,000 was just the absolute base of what you need to purchase a property for $100,000. Remember, $40,000 was just the bare minimum of what you need to purchase a property for $100,000. There is a few other things you have to consider. Things like solicitor costs, which could be around $2,000. Changeover costs or bank fees, call it $500. Now, because you're living at home, you don't have any furniture, you have to account for money for furniture. And depending on how much or how good or how nicely you want to deck out your home, that's up to you guys. Now, we also like to have a bit of money as a buffer in case anything happens. And let's just call it at a bare minimum, you want 3 months of home loan repayments covered, which is around 15 grand for a loan of $760,000. Okay, so it's not just 40,000. Let's just call it you need around $60,000. Okay, that will give you plenty of wiggle room. So it may not take 12 months to save up everything that you need. It may take 18 months, right? So like I said to you, how fast you can save up depends on if you're living at home, what your expenses are, what your plans are, if you're renting, do you have other debt, etc. Okay, so there's a few things that come into play, but what we've gave these clients is just a base case of their financial situation and how fast they could potentially save up to purchase their first home. So everyone, there is one more thing that I didn't bring up, which is the first home owner's grant, which is only for brand new properties, right? Now, I didn't bring it up because these guys are most likely going to purchase an existing property. And also to receive this grant, you have to purchase a property under a certain value. But if you're eligible for this first home owner's grant, just add it to your equation as part of your savings scheme and work with that. So for all you first home buyers out there, talking about it's easy. Having the idea is easy, but the hardest part is actually getting started. So talk to your mortgage broker, have a plan in place and get the ball rolling. So everyone, there you have it. I hope you first home buyers found some value in this video today. Thanks for joining me on another episode of the Mortgage Chat and I hope to see you next time. Peace.